Welcome all. I'm Kerry Lutz with Bill Powers. This is a production of Mining Stock Educators. Right now we've got Gerald Panneton with us today. Gerald is Chairman, CEO of Gold Terra Resource Corp. You're probably familiar with him, a geologist with over 35 years experience, gaining near legendary status as the driver behind Detour Gold and its ultimate success. He raised billions of dollars bringing the mine online. He's going to share with you the latest developments at Gold Terra. He's fresh off a string of great drill results, the latest being 19.7 grams per ton at the Yellowknife zone. Gerald, welcome. It's great to have you here.
Thank you very much, Kerry and Bill. It's my pleasure again to have a chance to communicate and share with us the Gold Terra story in Yellowknife, Northwest Territory, Canada. With all of this, I would like to welcome everybody on the audience, and I will try to keep the presentation as to the point and as also leave you enough time for any question that you may have during the webinar. But first, thank you for coming. And with all of this, going to cautionary statement and forward disclosure, I have to just mention those two slides for the audience. At the end of the day, we are a public company, and everything we're going to be talking about today is in the public domain, and so it's fully disclosed already. And our presentation can also be accessible on the website. Thank you, Kerry, for the nice thing you said about me. But at the same time, I do have a team with us. Joe Campbell, which was the founder, is also a geologist of many years of experience, more mine geologist, worked extensively on the Meliadine deposit that was sold to Newmont Gold. Mark Brown, our CFO from Vancouver, used to work actually for Miramar, which was the Newmont acquisition of Miramar back in 2008. And Mr. Louis Dion. Louis Dion is very important to me because Louis and I have been working together over the last 27, 28 years. We met at Barrick, where I spent 12 years and Louis spent more than 20 years. And of course, when I started Detour Gold in 2007 with the IPO, Louis was one of my first directors on the board. He's one of the top mining engineers in Canada, a very pragmatic person, and very to the point. And so if people ask us, plus the board, that we have a lot of good experience, we do have a seasonal management and a seasonal board of directors that understand mining and have done it before. Whatever it's Louis or myself, combined together, we've done quite a lot of mining project. Now, why Gold Terra and why investing in Gold Terra? And this is a company that has been around, that has built up a huge land position in Yellowknife. But I think the most important, milestone that we achieved in 2021 was something that was tried before, that was never been able to be accepted by Newmont. But over the course of the first exploration deal and finally the latest deal, we have a very good agreement. Very similar for those on the spot that would know about the Skeena Barrick deal that was signed in 2017. So roughly about 4 years ago, between Barrick and Skeena. And Skeena was a company that was going nowhere. That was a market cap of a penny stock, basically. And following the deal with Barrick, where the option to purchase the SK Creek mine, and they're going to revive the mine. The company now is worth $1 billion and have more than 3 million ounces of resource reserve. Con Mine is an amazing acquisition for Gold Terra. Again, it's an option to purchase. We have 4 years to generate more than 1.5 million ounces in resource, all category, to consume the acquisition and make ourselves valuable. Our target basically is 2 million ounces. And I can tell you that we went from a deal with Newmont that gave us about 60% of 25% of the property. And now we have a deal that is 100% of 100%. So we have a much better deal than we had before. And because of that, you'll see the result. And more importantly, what's important about Yellowknife is the fact that we do have a very important piece of ground that was missing in the package that we have. We already control 800 square kilometers. The con mine is just adding maybe 10% more ground, 5% more ground to our package, but it's a key one. It's a key one because the mine produced 5 million ounces, was shut down in 2003 when gold prices were depressed, was also left behind a lot of gold. And between 2003 and 2022, over almost 20 years, there's been no exploration on the property. And the deposit is still open at depth and along strike to the south. And that's what we're after. Not only that, the mine also left about 650,000 ounces of gold at a price of $350. Proven probable as well in 350, roughly somewhere around, at 10 to 12 gram gold. So very good. And that's what we're after. We're after bringing our 1.2 million ounces resource that we have now to add more than 2 million ounces at 10 gram plus. Why 10 gram plus? Because 10 gram plus is worth $600 an ounce. Gold is 1,800, 10 gram, 1/3, 600. Operating costs in Canada are roughly $200 per ton US. So we know there's a very good margin, a very good profitability to go back. We're not going to have maybe a huge deposit and produce 500,000 ounces a year, but our investment will be smaller and our production will be smaller, but our profitability will be great. And that's the 3 components that we want to go forward. So with this acquisition that you see there, and look the back and right of Newmont, if we find 5 million ounces, which is still very possible, we're going to be in a very good position. Whatever we do it ourselves, or Newmont comes and do it with us, Gold Terra will be in a good position. And just to talk to you a little bit about what it remains, you can see the property map here, where the pink is the area of the con mine and the Campbell Shear. The Campbell Shear is a huge, it's very important gold plumbing system. 70 kilometers long, has generated 14 million ounces only on 7 kilometers between the Giant and the Con mine along the Campbell Shear, right in the heart of Yellowknife, full of infrastructures. Now, I'm not going to spend too much time, and I'm going to just drive you to show you the Con mine acquisition. You can see on the map here that you have the 2 zones, the Con Shear and the Campbell Shear, and in between there's some other veinization that was mined. And you can see that from the cross section that goes from A to B or from the west to the east, the dipping of those zones subvertical to the west. The Con mine, of course, Campbell Shear is mined, 5 million ounces, but it's still open. There's still ore there. And quite a lot of it, as we can see, already 650,000 ounces is left there, but a tremendous potential. Not only that, if you look how important the Campbell Shear is, that there was also a hole that was drilled in 1961, about 10 kilometers south of the Con mine, Campbell Shear, which generated 8 grams over 8 meters at 100 meters vertical below surface. So very close to surface. And no follow-up since 1961. We're talking about 60 years of non-exploration. So tremendous potential still there. And when you look and combine all of this information along the Campbell Shear, and you're looking at it from surface to depth, from north to south, looking west, you have a compilation of all the ore that has been found and mined on the Campbell Shear. Most of the mining was mainly the pink stuff, or the red stuff, the high-grade stuff. But you can still see all the yellow, which was probably like 10 grams over 5 meters, 9 grams over 5 meters was still there. And everything that was above 10 grams was mined. A lot of potential, because what you see there is that there's a fault called the Pud Fault, very similar to the West Bay Fault, which is up on the long section. These 2 faults are just late faulting that displaced the deposit. So when they hit the Pud Fault underground, they map it, you can see it very well. It was basically, they stopped exploration. They did a bit on the other side of the fault, but not enough. So when you look at the potential, for example, hole Y88, 14 grams over 5 meters, or the Yellowknife zone that we're going to be talking in a minute, where we intersected 20 gram over 5 meters, plus another zone of 4 gram over 11 meters. So we know we're in the Campbell Share. We know it extends to the south. And our program in 2022 is to be aggressive, drilling the Yellowknife zone on 50 meter spacing, and then drilling the Campbell Share on 200 meter spacing from Yellowknife zone all the way to about 1,400 meters vertical. We've already secured bigger drills, 2 of them. One is arriving at the end of January, and the second one is arriving in March, April. These 2 drills will be busy all year long drilling holes that are about 1,500 meters long. Will take about 2 to 3 weeks each hole, but we're going to be targeting all of this area that you see where we can fit another 5 million ounces. That's as simple as that. And the deposit is still on the other side of a Gold Terra staring 100%. So with all of this, we could end up by the end of 2022 with 40,000 meters of drilling, a potential resource that we envision of 2 million ounces. It's very simple. We know the Campbell Share. We know where it is. We know the displacement of those faults. And when you take off this little box of drilling, you can see that there's been very few drilling down dip, down plunge, south of the Campbell Share Con Mine deposit. But what also we're gaining with this purchase option is a brownfield project, a property that is 98% reclaimed, which at the same time will give us infrastructures, being brownfield, being a surface lease. So it's an industrial site already permitted for activity, such as mining. We also get the Robertson Shaft. Robertson Shaft was sank in the 70s. It's 1,900 meter deep. It's a steel concrete shaft, 2,000 tons per day, 10 feet by 20 feet approximately. A square shaft. It's not a circular shaft, but still a very good access will be given with this Robertson Shaft to go back if we need to underground and to redefine those zones that we will be finding. It's only 2 kilometers north of where we're going to be drilling. It's still going to be a very good access that can give us with all the drift already in place as well. So you can imagine the benefit of getting all the surface infrastructure plus the underground access that we'd have. To put that in perspective, a shaft of 2,000 meters vertical in today's world will probably cost somewhere between $60 to $80 million US, and will take 2 years to sink. For us, we could rehabilitate the shaft, dewatering over a period of 3 to 6 months, and not having to spend $80 million US to resink another shaft. This could be a very good access or a very good way to be able to pull the ore out, as we could access the Yellowknife zone by a ramp. So there's a lot that can be done. Now, let's talk about our 2021 result, because we cannot talk about 2022 result yet, and we look forward to do so and be aggressive with this drill program. But let's talk about Yellowknife, which was this zone that is very close to surface that we focus, especially in the fall. In the first phase of the program last winter, we did 2 holes on the Yellowknife zone, hole 3 and hole 5, out of the 13 holes we drilled in the winter. And 3 and 5 were already successful. You can see that 14 grams over 4.7 meters, 11 gram over 4.4 meters. And we started to infill the zone. We went on the outside, we went on the edge. We also went in the plunge of it where we thought we would hit. And I can tell you, you drill the hole, you look at the core, and you know you have 10 to 15 grams over 5 meters, or you have 5 grams over 10 meters. And even if it's 2 or 3 gram or 5 gram over 10 meters, it is a technical success because we know that the zone is there, it is mineralized. And when you drill on 50 and 75 meter spacing, you're getting just the beginning of it. More drilling will improve the economics of this zone. Now, what does the Yellowknife mean? It's a small zone for maybe some people. It's almost 200 meters in strike line. It's got about 6,000 tons per vertical meters, 2,000 ounces per vertical meters. We already following the zone from roughly 100 meters below surface to 400. So 300 meters times 2,000 ounces per vertical meters, that's almost a potential. I'm saying a potential because we haven't calculated, of 600,000 ounces. Our goal is 2 million ounces. We found 2 other zones like Yellowknife, plus the extension of Yellowknife at depth, and we will get over 2 million ounces. It is just a matter of drilling. This company is not looking for a target to drill. We have it. It's the Campbell Shear. It is obvious. It is 70 kilometers long. This is 100 meters wide in some area, 20, 30 meters in others. We just need to drill it and define this 2 million ounces plus target that we have south of the Con Mine, in town, very close to infrastructure, where everybody goes home at night. Not only that, we also, this is a section to show you the continuity of the ore zone. I'm not going to go over that, but it's there, it's continuous, but has hole 15, which is about 70 meters west of hole 14, for example. You can see that the zone will vary in terms of grade, but the zone is still there. And what you need to do is go underground via a ramp eventually and infill drilling to prove it up. This is what you do and call the feasibility study period. Now, if people know what I've been able to, going to school at Barrick for 12 years, being involved in 2 mines that got into production and were successful, plus Detour Gold, we don't want to waste our time. So 2022 is a big drilling season for us. Minimum 40,000 meters of drilling, subject to financing. Once we have done, we have a resource at the end of the year. And if we're satisfied with more than 2 million ounces, we're going to enter into PFS, baseline studies, and move the PFS into a feasibility study very quickly. We have the project. There's no question in my mind. We're already within infrastructures. Everybody goes home at night. And I think we're going to be able to benefit from that. But not only this, the 2 million ounces found on the Con Mine will bring the 1.2 million ounces we have north of town becoming more economic than they are today. Today, we're valued at $30 an ounce, basically, US, for 1.2 million ounces. Imagine if the 1.2 becomes more economic because I found 2 million ounces on the Con Mine at 10 gram. And in our plan, we decide to build a mill out of town, which probably will be well received by the town, avoiding the noise of a mill and the crushing and grinding. You move it north of town, which is only 20 kilometers, 15 miles, basically 20-minute drive. And you put it between Crestaurum and Samoto, or close to Crestaurum. And I'm saying this because those resources that are currently inferred could become very valuable for the company. For example, in the feasibility study, one of the options we would look at is trucking 1,000 tons per day from the Con Mine at 10 to 15 grams to the Crestaurum mill. And Crestaurum being an open pit with a very low strip ratio, already at surface, grading 6 grams, could allow us to build a mill that could be 5,000 tons per day or more and treat both Crestaurum and Con Mine high-grade stuff and produce more than 200,000 ounces a year for the first 7-8 years. And after Crestaurum is depleted, we go to Samoto and we use a Crestaurum pit as a tailing impoundment, which basically doesn't have to be built because it's already a hole that you fill up. So we would achieve so much saving, so much synergy by combining these resources together and making it a bigger project and also a more viable project with better economics, using the value of a 6-gram open pit with a 10-gram underground operation. In summary, this is our goal. This is our target. As you can see, we already know where we're going. The next step is drilling more than 40,000 meters on the 10-gram deposit plus of the Campbell Shear south of the Con Mine and move along this resource as we move. And if you have any question, I'd just like to maybe open a little bit, just talking about ESG. I think for a lot of investors, a lot of institutional It's always very important. I can speak for myself that I've been involved in ESG for the last 20 years, building my first mine in Tanzania in 2004. And of course, with the Detour Lake project that we brought from IPO to first gold pour in 6 years. We are there to listen every stakeholder in the area of Yellowknife. The most important thing when you come into an area to develop a project or open a business is listen to the locals and the stakeholders. The first thing, by listening to them, you will learn what they're looking for. And that's the most important thing in your engagement. It's being there to listen to them. From that point, you can then negotiate and basically fill up all the blank that needs to be filled up when people are questioning a project. With this, we'd like to thank you very much for your time on this webinar, and I look forward to answer your questions.
Thank you, Gerald, for that presentation. And let's start with an ESG related question. You mentioned you're in consultation with the community. What are some of the biggest concerns or objections thus far that you've gotten from the community?
We have not initiate, of course, with COVID, it's been very difficult to have a community meeting. Before COVID, the company used to have 2 times a year some community reunion where the company will present what they were planning to do during the year. And usually it's done in the fall because the winter season is always the biggest season for drilling. And of course, because of COVID, it has not been possible. However, we're gonna reinitiate those consultations. I think knowing the Yellowknife camp, knowing where the Con mine is located, by putting or conceptually putting the mine and the mill, not the mine will have to be where it is, but it's less noise. But if you put a mill, the biggest noise is always the crushing and the grinding. So if you put this away from town, which is only 15-20 minutes, I think this will be well received by the community. Because if I was using the brownfield of the Con mine to reset a mill there, we're so close to town. So by avoiding that, I think it will be well received. But no objection of the project. Yellowknife is a mining town that is currently servicing all the diamond mines of the Northwest Territory. So it's not like it's like working in Timmins, working in Val-d'Or, or working in Rouyn-Noranda. These towns became town because of the mining history. So is Yellowknife.
Okay. Question regarding your drill program for next year. You mentioned 40,000 meters of proposed drilling. Is Newmont consulting with you or giving input on the proposed drill holes?
We have an amazing technical committee that is set up through our agreement. And the main reason for the technical committee is not to decide where to drill. Mind you that if Craig, for example, from Newmont, my counterpart at Newmont, had some idea, I will welcome them. I always welcome idea. I think when you plan a program, you plan a program to be successful. And the best way to be successful is to take everyone's ideas. And if Newmont have some idea, but look, it's simple. We have a window of roughly 4 kilometers south of the mine, from surface to 2,000 meters. That's the window we need to drill. And there's no question, with 14 grams over 5 meters, with so many multiple zones, that the potential is there. The technical committee and the relation we have at Newmont is mainly to approve, to make sure that we respect the ESG of Newmont, for example, all the environmental concerns that they may have. And because the property is 98% reclaimed and will be completely reclaimed by the end of the year. So that's where the sensitivity is with Newmont, is where we're drilling. But we're currently not drilling at all on the surface lease yet. We may do it later this year, but the first pass is outside the surface lease. But once we're going to go closer, for example, to the mine itself, because we may want to go and test some of these areas that are been left behind, we're going to be working even more closely together to make sure that we're on tandem with that and we're in agreement.
Okay, next question. Will all of our drilling occur on Yellowknife? You may have answered this already, but.
The drilling basically goes from, everything that is south of the Pud Fault. But I can tell you, and I'm not sure if you can see on the slide, I'm not sure if you can see my arrow.
Is it a red arrow?
Is moving now?
No,
Okay,
I'm sorry.
Right closer to where we see Con Mine property, right below that, this area has been underexplored, and there's still some very good potential for additional zone, such as the Yellowknife North Zone, where a few drill holes were done before. But, this deposit, which is the down dip from the giant mine, extend to the south. But there are also satellite zone and multiple zone. And that's we're aiming basically as to drill the whole property, not just Yellowknife. Yellowknife will have some focus on 50 meters spacing with a smaller drill to continue define the zone that we already have outlined. So it's going to combination of exploring on 200 meters spacing for additional zone versus making Yellowknife and confirming the resource there. Is it 500,000 ounces or 750,000 ounces?
Okay. Of all our drilling done so far, do we have all of the results in?
So of the 26 hole drill in 2021, we still are waiting for about 4 holes. And I can show them to you on the next slide. On the long section, you have hole 23, 24. So basically we have result up to hole 22 and we drill up to 26.
Okay.
And by the way, the drills are moving back to site this week. So we're going to be drilling again very soon.
And when do you expect to commence the 2022 drill program?
Now.
So not waiting for a financing essentially is a.
No, we have close to $3 million in the bank.
How are you going to finance the 40,000 meter program, considering 3 million won't accomplish that?
No, of course not. Of course not. Our average cost is about $200 a meters. We will tap in the market. There's no question. When, I don't know. For me, it's always a question of price. I'm very sensitive to price. And if the stock was $1, I would definitely maybe raise all the money, 10 million share at the buck tomorrow morning. But the stock is not $1, right? So we have to live and go from result, from progress like we've been doing. And I think we've achieved over the last 2 years, pretty much, I'd like to do deal faster than that, but when you're dealing with a company that is worth so many $1 billion and the size of Newmont, you don't get things done in a week or two. But when we signed the initial agreement in September, we give ourselves to November 30th to finalize the definitive agreement. We don't need to go back to the table. This agreement is set with all the parameters. And we would love to drill 40,000 meters of drilling. That's roughly 8 million Canadian. Last year, to give you an example, we did a deal sometime in February when nobody was watching. We did it privately. We did a flow-through deal at 36 cents Canadian, and we had a back end where one institution took the whole 8 million share at a discount price from the flow-through. And we were able to do our 13,000 meters of drilling in 2021. And that's how we proceed. I'm very careful. As you probably know from Bloomberg, I personally own 5.5 million share. And I will be participating if we do another financing. I don't have any stock option. I align myself like an investor like you guys. like anybody that wants to invest money, institution or individual. And, we raise money. I'm very sensitive about pricing all the time. We don't have the same market we had when I was building Detour Gold. It's a very different market in today's world, but it doesn't mean it cannot be done when you have a good project. And we already have some very good shareholders that wants this project to go through. They're very happy with the result of the Campbell share and the focus on the Campbell share.
And Gerald, we should expect that you would do a raise when you do it without warrants, right? As that's been your mode of operation.
You know me, no warrants.
Even in a down gold market, no warrants.
No warrants. Never done warrants. I hate warrants.
Okay. Warrants
are for people that wants to take advantage of the company, like the brokers and some investors. But it's a ceiling. So why would you do a ceiling? Why would you put a ceiling to something that can go to $2?
Yep.
Just think about it. 200 million share, add 2 million ounces after spending, say, $10 million. If I find 2 million ounces more this year and I spend $10 million, that's $5 an ounce.
And you expect to be paid
Tell me
100.
a better deal than that. So
and
why
you
would
expect
you?
To be... Sorry, go ahead.
Yeah. No, go.
You expect to be paid $100 an ounce eventually? That's kind of your target you've mentioned in the past. Is that correct?
Well, think about it. I understand that the valuation of a low-grade deposit like we have now, 1.2 million ounces at $30 an ounce, it's probably a bit low. Probably should be $50 an ounce, something like that, because it's an open pit, it's low grade, and it's not big enough. So I understand that you're undervalued, but I prefer to be undervalued today and create the value in the near future. If I bring 2 million ounces at 10 grams, and the value of a ton is, $600, and you're operating for sub $900 an ounce, and the goal is $1,800 an ounce. I know it costs money to build. We don't know exactly the number. We know it's not going to be a big thing like Detour Lake. It's not going to be a $1.5 billion. And by the way, if you want to build Detour Lake today, it won't cost $1.5 billion. It's probably going to cost $2 billion plus. So price is very difficult for anybody who builds a house or build a project or build a warehouse. It's expensive. We know the short supply. We know the labor difficulty, but we're not building today. So what's the point of telling you the price today? What I can tell you is that $100 an ounce is not far-fetched. If I look, for example, at Skeena, which has some infrastructure like us, and they have 3 million ounces, or say 4, that means at $1 billion, they're valued at $250 an ounce. So saying $100 an ounce for us, it's not much. And if we are valued at $100 an ounce, with 3 million ounces in the book, that's $300 million US or 400 million Canadian. So here's your value creation. $10 million Canadian of drilling for 2 million ounces of resource plus at 10 grams.
Next question, has your last offering to staff and consultants been gobbled up?
Oh, can you repeat the question, Bill, please?
I'm just reading it verbatim. Has your last offering to staff and consultants been gobbled up? Have they participated? Have they taken the majority?
Referring to the December 31st stock option program. So to retain employees in the company, the chairman doesn't need to, so I don't take stock option because I don't need stock option to retain talent. But to retain good geologists, to retain people, and it's always a good way until you're in production to do stock option. So we only have 6 million stock option outstanding. We have 0 warrants. That's our philosophy. Less dilution as much as possible. So basically what you do every year is a top up of the stock option. So for example, a director that has 200,000 stock option initial grant when he joined the company had a top up of 50,000 stock option. These stock options are not available now for at least the first 6 months. After 6 months, 25% becomes available. After 1 year, 50%. So it takes 2 years to get their grant fully available for them for vesting. And We do this to keep talent, to keep the interest in the company. Sometimes people don't have the flexibility or the luxury to be able to buy stock like I can. I'm lucky I don't have to work. And I find that I prefer to keep the stock option to attract very good talent. Eventually, once we get into a phase of feasibility study and potential development, we will need to attract better talent along the course. And that's a good way to do it. But they don't vest right away. And it takes a certain time, and they're good for 5 years, as mentioned in the press release of December 30th or 31st.
Okay.
I hope I was able to answer the question.
I think so. And perhaps the other thing the listener was asking about is just confidence from insiders and people close to the project. Are they buying into the private placement offerings when they're offered? I think that's also was part of the essence of the question.
Yes, we always, when we do a financing, last year financing actually went very quickly and was taken by one person. So we didn't have a president list, for example. But the one before, there was a president list. And usually the president list is sometime, it has been up to 15, 20%. Last time around was maybe 10% of the issue was insiders and president list. We have a very good follow-up. I think some of the comment last year was to simplify the executive structure. And David offered to resign because he had an opportunity to go somewhere. And we felt like, listen, I've been involved in the company for 2 years, and I've been working with David over the last 2 years to restructure the company, to simplify. We took the drill cost from $275, $300 a meter down to $200. We've acquired the Newmont option to acquire the Newmont for 100%. We've accomplished everything we said we would be. And now it's the time to drill and get those results. And that's what's good. Don't forget, Newmont put money into the company. And the main reason is that maybe they're going to take a run at us if we find too much. So this is a good partnership to be and to raise money. We have also some very good institutions. And I think one of them missing on the list that we have here is US Global. We have RBC Asset Management from Toronto, Mackenzie Fund, which is a big fund that has always been supportive in the resource sector. And of course, SSI is a Swiss Liechtenstein fund and we have other funds that are a bit smaller. You know, they have a position of 1%. I myself have a position of almost 3% in the company. I believe in this project. That's why I joined. I didn't came to help David sort it out. I came because this was a good story.
Gerald, on the note of the restructuring you just referenced, what is your monthly G&A before drilling currently now after this restructuring?
Just under $100,000 a month.
Okay. Next question, any drilling planned north of the city like Crestorum in addition to the Yellowknife and the Con Mine drilling?
We always have planned to go back on the resource. Crestorum got a good injection of drilling about a year ago or 2 years ago, I should say. And we tried to test the deposit at depth at the 400 meters level. Crestorum is drilled 25 meters spacing over 1.5 kilometers down to about 250 meters. So it's a very solid resource. We could have, but I don't think it's a priority now. Other target of high-grade nature like Miss Pickle could be of interest of drilling if we raise sufficient money to do that. The season to drill those targets is usually the winter. There's no way I would spend money with an helicopter to drill in the summer, that like they were used to do in the past. That's not me. If you can drill at $200 a meter, you drill in the winter. If you have the money, say for example, we had tons of money to drill. Yes, I would maybe spend a bit of money in the North Belt. But those targets are second priority to the Campbell Shear. The Campbell Shear is the gate to make the value for the shareholders in this project, in this company. And that's why our focus is the Campbell Shear south of the Con Mine.
Okay, next question. What is the biggest risk for 2022? Is it financing risk? If not, what would it be?
I think we were able to drill through COVID without any problem over the last 2 years. So we know it's not a risk because our people live in Yellowknife, except one person, I think. One of our geologists comes from Quebec. So everybody's already at site. Everybody lives in Yellowknife. The drills have already been moved. The drillers are coming from Kamloops, and if they have to quarantine, it's easy. They can quarantine at the drill. It's not like in the public. So no issue on COVID. And I don't think there will be an issue on financing. Of course, it's not done. You can always put a question mark if you want. But if you look at my history of raising money, I don't think it's an issue.
Okay.
And we have very, very good support from those institutions that you see on the page 4, where we have the major shareholders.
Right, next question. What is the kicker to a feasibility study? Would it be finding 2 million ounces at the Con Mine?
Yes, sir.
Okay. Are you accessing the current drilling from Con? Is the verbatim question. I think they're asking, are you drilling underground from the existing shafts?
No, the current shaft is flooded, so we would have to dewater it. Currently, the cheapest way to outline, for example, Yellowknife, is from surface all the way to 800 meters vertical. Now, most of the exploration that we're going to be doing around 1,000 meters vertical will be a fence of hole. The first thing we're going to do is a fence of hole every 200 meters at 1,000 meters elevation over 1 kilometers strike line, all the way underneath Yellowknife. Once we have the result of those first 5 holes, we will know where to go up dip and down dip in the best area of alteration and mineralization. We know we're going to hit the Campbell Shear. There's no question about that. We know it's there. It's not a question, are you going to hit it or not? Look, the Campbell Shear, think about it, 100 meters wide and 70 kilometers long. It doesn't go away. It may change in dip. You know, maybe it's subvertical, 70 degree, 80 degree. We've noticed it on Yellowknife. Some of the zone are more vertical in some area. The question is very simple. We're going to be drilling with up to 3 drill, and maybe more. We're starting with 2, a shallower and a deeper. And the second deep one is coming towards the end of March. We're going to put an all year, 12 months weather road that allows us to access the drill by pickup truck 12 months a year. So we'll be able to be drilling the Campbell Shear south of the Con Mine over 3 kilometers plus through all the year.
Okay. Follow-up question. How many deep holes do you plan at this time?
Every deep hole is roughly 1,500 meters vertical. So we're planning at least, I would say, 20 to 30 holes.
Okay.
So with 2 deep rigs, we should be able to do all of this in 2022.
For the
And
next
the other drill will be doing the shallower drill, shallower follow-up on Yellowknife. And if need to be, if we're successful, we just have to add money and drills.
Okay. For the mineral resource estimate projected at the end of the year, due to your planned spacing, do you think that it will be mostly measured and indicated, or will there be a lot of inferred? Do you anticipate?
Yellowknife will become indicated. Most of our drilling at 200 meters will spacing will be more inferred. But the deal with Newmont is all category.
Okay. Do you have any confidentiality agreements signed with any other companies besides Newmont?
None.
None. Okay.
And we're not for sale.
And you're not for sale. All right. Those are all the questions. Gerald, do you have any final thoughts as Kerry comes back on?
Look, I remain available anytime you guys would like to speak and have further question. It's not because the webinar will be terminated in the next few minutes. You're always welcome to reach out. You have my address, email address. I don't put my phone because I prefer to communicate via email and if necessary a phone call. But our company and myself, and with all the years I've done after I left Barrick, my goal is always to be aligned with shareholders and be there for you. And whatever you want to buy or sell, you know, it's your right. My job is to tell you the story in the most honest way, transparent way that I can, and answer all of your questions. We have a very good opportunity in front of us, and we look forward to share it in the future.
All right. Well, thank you so much, Gerald. And I think from this presentation, you can see Gold Terra's true value. It's had an extremely successful drill program that Gerald seems to get better with each new hole that's drilled. It's trading at a huge discount based on ounces on the ground. And Gerald you put your own money on the line to make it a success. So I suggest you go over to the company's website, goldterracorp.com, sign up for notifications. You'll get the latest drill results on the remaining holes. Ticker symbols on the OTC, it's YGTFF, and on the TSX Venture, YGT. Thanks all. The presentation's over. You can expect to get a replay link by email shortly so you can watch it again. And if you missed anything, you'll get to check it out. Good day, all. Thank you.
Thank you all.